Sharat Chandra, who's the founder of EmpowerEdge Ventures, joins me on the broadcast for more on this. Mr. Chandra, how big a game changer this is going to be for the objectives with regard to this scheme, whether it is the rupee part of it, whether it's the liquidity part of it, how much do you think of a game changer this will be?
I think this is going to be, I would say, a repeat of the FCNR initiative which RBI took in 2013. So in 2013 also we had a similar situation where rupee was depreciating heavily. But if you look at rupee is one of the macro flashpoints for India, right? But the bigger problem has always been about the money inflow or the dollar inflow into the country, or the FDI inflow into the country. If you look at FCNR deposits for FY25, it was close to $7 billion, but FY26 it was as low as $946 million. So this influx of new money, what will also do is it will lower the cost of capital, and it will also give banks the leeway to raise capital at an efficient rate. And mind you, the current US Treasury yields for 3 to 5 years, it stands close to 4.2 to 4.3, and that's where the FCNRB deposits become much more attractive for not only NRIs but also for corporate entities to move money back to India. And there are estimates which are saying that both external commercial borrowing and FCNRB can bring close to $70 billion worth of dollar money back to India. So this will give a lot of impetus to, I would say, the credit inflow into the country, and this will also translate into, I would say, effective cost of capital for some of the priority sectors. If you look at housing for that matter, right? So housing as a sector contributes close to 7 to 8% to India's GDP. So if some of this money can be channelized to housing sector, and today RBI also came out with guidelines with respect to lending to REITs, real estate investment trust and in REITs, right? So this will also give a lot of, I would say, impetus to those sectors as well.
And in terms of really providing the bulwark to the exchange rate, how significant would that be?
I would say, see, the rupee will take its own sweet time to recalibrate, right? And there are reports that it might come back to 92. If you look at today's levels, right, the way both RBI as well as government has intervened, where the government has deepened security markets and also rationalized FPI taxation, right, where there's no tax on capital gains as well as interest income. So this is already translating into rupee getting stronger by close to 14 paise today. I think it's 95.27 now. So we're already seeing some reflection in terms of rupee getting strengthened. But again, we also have to be cognizant of the fact that rupee will be in a free flow for quite some time, and it might settle close to 92, or where even most of the industry participants and regulators are looking at.
Okay. Final question to you, Mr. Chandra, which is around the fact that the larger messaging that the government is really trying to do. One is measures, second is the messaging, which of course has an impact as far as sentiment is concerned. And that's what the goal and the objective really here is. Your thoughts on that?
Yeah, I would say I think the messaging of the narrative is right on the spot, and this is where a lot of credit goes to the government by intervening at the right time, especially with respect to FPI, right, foreign portfolio investors, because there's a balance of payments report which RBI released, and it was stated that the net FPI outflow was not something to write home about, right? So I think this amount of messaging will attract more foreign capital, and it will help the economy in general.
All right, I'm going to leave it there. Thanks much for joining us to really give a sense of where things stand right now with regard to this. That is Sharat Chandra, founder of EmpowerEdge Ventures, telling more about the impact those measures are going to have on the exchange rate. Shifting focus now to the